Welcome back, everybody. If you're new, my name's Nicholas, and this is Investing Against the Grain. Investing Against the Grain, what does that mean? I named this channel Investing Against the Grain because I believe the way I was investing was against the grain. I don't believe in diversification. I don't believe in S&P 500, as long as you want to do your homework, right? And that's what this channel is about, making sure we're doing our homework and investing in very unique ways by going all in, right? Things other people deem risky. But sometimes we have to take a look at ourselves and have a ego check and make sure that we're not just a echo chamber for ourselves. And that's what I did over the last couple of days. I've been really contemplating about what to do about this. And the real revelation was when Andrej Karpathy decided to take this sabbatical. I decided to take a step back and look at what was actually happening in the world of full self-driving autonomous vehicles. And what I've come to terms with after seeing what Cruise has been doing, especially in San Francisco, and how now they're having these driverless rides going around San Fran from like 10 p.m. to 4 or 5 a.m., and they're actually doing autonomous vehicles. What I've realized is I might have been mistaken all along. Well, my thesis was right, but I think my thesis changed. Look, when we look at GM has their Ultium battery platform. GM has Cruise. GM has this scalability. They have, like or not, an amazing leader in Mary Barra. GM's doing a lot of really amazing things. And for those reasons, look, this channel has been focused a lot on Tesla, but I think it's time to pivot. I think the smart thing to do to invest against the grain is to ditch Tesla on all my investments with Tesla and go all in right now with get the hell out of here. There's no way I would do that. Happy April Fool's Day, everybody. I hope you didn't take me too seriously there. If you think that I'm just messing around with you guys, obviously I am. It's April Fool's Day. Don't get too serious. Don't freak out in the comments down below. Just trying to have a little fun in the nature of April Fool's Day. So hopefully I got some of you on that one. I have my fiance behind here just laughing. I don't know if she expected me to take it with that kind of twist. But listen, today's video, I want to talk about my predictions for Tesla Q1 deliveries. Yes, I'm still keeping all into Tesla. Yes, I do think that is investing against the grain. And no, my thesis hasn't changed. Andrej Karpathy, he's just taking a sabbatical. He'll be back. He's doing amazing things, releasing amazing tweets with a lot of great blogs. Nobody's ahead of Tesla. Cruise for sure is not ahead of Tesla. And yeah, we'll leave it there. So with that said, we're going to dive into my Tesla numbers. But before that, I want to talk about a few very important things. So before we get into it, do me a favor, hit the like button, hit the subscribe button, ring that bell, and let's get into it. Before I get into my prediction for Tesla Q1 deliveries, I want to talk about a couple things, and this will be really quick, okay? We're not going to belabor the point here. I want to talk about Elizabeth Warren's recent comments about the Billionaire Tax and whatever. Look, this channel is about investing, all right? I cover a lot of Tesla because, well, I'm all in on Tesla, and I will probably be all in Tesla for the next 2 decades. So I tend to talk a lot about Tesla, and there's very good reason, right? I mean, when it comes to investing, I can't see a better investment out there right now, especially not with risk reward, with innovation, anything of that nature. But let's go back to Elizabeth Warren. The whole idea of a billionaire's tax and what she wants to do and what Bernie wants to do and what Biden's proposing is everything that any of you should not be. And none of this is investment advice, but listen to me very carefully. These are things none of you should do when it comes to your own finances at home. Okay, look, we live in the real world. They live in a fictional world. If you need to make more money, the fastest way for you to make more money is to cut your expenses. It's to track your money, see where it's going, into budget, to live beneath your means, okay? The amount of income you have coming in post-tax, you should not be spending all of it. If you're in excess, guess what? The simple solution is not to, I need a pay raise. No, wrong mentality. That's an unhealthy mentality. The mentality you need to have is to cut, see where you can trim back, see where you're being wasteful, all right? It's to get lean. That's what you need to do. And that's what Elizabeth Warren, that's what Bernie, Biden, all of them, they just don't seem to get. So I just want to call that out because I think just seeing that is a horrible, horrible message we're sending to many people in the world, especially to young kids. That is not the way the real world works. That is not the grown-up way to do things, and that's for sure no way to get to financial independence. And trust me, being financially independent is the most freeing thing that you will ever experience in your life. And if you don't know what I'm talking about, just wait. You will get there. The second thing I want to talk about is this recent release of oil reserves from our strategic supply. Look, the whole point of having these reserves is for times of war, of crisis, of embargoes, okay? That's the whole point. The whole point is not for a political reason. This has nothing to do with blue or red, left or right, Republican, Democrat. No. I honestly think if there's a Republican office, they'd be doing the same thing. So it's got nothing to do with that. My whole point is that, again, this is about investing, right? So I'm going to tie everything back to investing. This doesn't solve any problems, all right? The fact that they're going to sit there and release 1 million barrels a day, which is, barely anything that it's maybe 10%. I think we use 10 to 9 million barrels a day. It's not really going to make a big impact. The bigger point, though, is that we're going to do this for 6 months or just until, the elections. Ironic, right? But my point with tying this back to investing and finance is it's the same problem with the student loans. All right, with student loans, people have talked about, we should just go ahead and get rid of everybody's student loans. And I get it. A lot of people have crazy student loans and they're all for this. But here's the problem. If with a wand, we were just to go and get rid of everybody's student loans, that doesn't solve the problem. Because guess what? Next year, there's going to be a new group of students going to college, and they're going to have student loans. And then the next, and you're right back where you were. This doesn't solve the problem. How do you solve the problem with student loans? Well, for me, and maybe this is a little simplistic, I think it's pretty straightforward. Stop allowing banks, stop allowing the government to issue loans to kids who can't afford it, or have it tied based on your career and your degree, right? I think if you were to do that, then there's less kids, less students out there that can get these crazy big amounts of debt, and that's going to force schools to have to lower their prices, right? To supply and demand. We should not be allowing these institutions to raise their prices and then say, okay, well, I guess we need a bigger loan and give it to them. If we did that, if we restrained the amount of capital we would give out to people who have no skills, no actual value into a working economy yet, I think we would be in a better place. All right, so going back to the oil reserves, look, we can release 1 million barrels every single day for 6 months. And will that have some relief? Sure, short term, just like waving a wand, getting rid of all student debt would have a relief for a very short term. But what happens after 6 months? What happens day one after that? So we just have less supply now. So now demand's still there. That hasn't changed. We haven't put any more rigs back online. There's no extra pipelines coming on. Russia is still has the sanctions on them. Europe is in more of a crisis probably than what they were before. OPEC isn't releasing anymore. So guess what? You're right back where you were. If you wanted to actually fix this problem, there's 2 ways you could do it. One, if you want to fix it by supply, well, you need to drill more. All right, that's plain and simple. Maybe that means that the oil companies have to actually start drilling more. Maybe that means the government has to open up more leases. Maybe the government and the oil companies are just at odds because oil companies want to make more profit, but they also feel that the administration doesn't understand that, yes, you gave me all these permits for all these leases, but it doesn't mean it can all be drilled. Right, that is part of it too. There's more nuance to it than what we hear on TV, and I don't know all the details, so I'm willing to acknowledge that. But the point is, that is one way: increase supply. Another way, get rid of if you want to lower prices, get rid of the tax on gas. That's another quick way to solve that and give some quick relief to the everyday people out there. But hurting our strategic supply, dwindling it down by a third, while we still have Russia as an oddball, while we don't know what's going on with OPEC, what if China decides to go ahead and support Russia? Russia launches a nuclear weapon. We see Europe fall into further decline. They don't have any oil. What are we going to do then, right? It doesn't put us in a very strong position. So I'm never for taking those kind of measures when we don't need to, and there's other levers we can pull. So again, this to me can all tie back to investing in a way of thinking. So I think in times like this, we need to be more resourceful. We need to cut back ourselves and make sure that we are spending every dollar with intentionality, which is something you should be doing in good times and bad regardless, because if you do that in the good times, it's going to set you up for success on the bad times. Finally, the last thing I want to talk about is this yield inversion that everybody all of a sudden is an expert on and wants to talk about. Look, here's the problem with this whole 10 and 2-year inversion. A lot of this can be a self-fulfilling prophecy. Right? We see the 2-year and the 10-year invert, and then everybody says, well, this is an indicator of a recession coming. Well, yeah, but it's kind of self-inflicted, because if we think that the future is going to be bad, right, and then all of a sudden the 10-year becomes cheaper than the 2-year, well, that's because people are starting to hoard money. They're bringing supply back in. They're not right? I mean, it's this self-fulfilled prophecy that happens. So I don't think the 2 and 10-year yield inverting is that big of a deal or that big of an indicator. The Fed tends to look at, I think it's the 3 and 18 month, and that looks very healthy right now. But I think our economy is pretty healthy. I still see people spending like crazy. Supply chains are still backed up. And why are they backed up? Because there's so much demand. Why is there so much demand? Because people keep buying. And why do people keep buying? Because they have money. So, I mean, for a irrational person just to look at that, and maybe I'm simplifying it too much, I think we're okay right now with the economy. And that probably means that we're going to see a higher rate hike come in this next month, right? We're probably going to see a 50 basis point or a 0.5 increase. So I don't think it's going to be that big of a deal. I think the market's kind of already anticipating that. But let's talk about Tesla. What does that mean for Tesla from the stock price? Well, from a stock price, I honestly don't think we're going to see too much fluctuation with Tesla. And it has nothing to do with inflation. It has nothing to do with the rates. It has nothing to do with any of this being baked in. I honestly think we're going to be in a relatively consolidated space right now with Tesla, no matter how bad things get, because Tesla announced this split. I think the split has put kind of a nice resistance under the stock to protect it from going lower. Just my theory. I don't know if it's true. I don't know if that holds up. I don't know if there's any history of something like this being true. But I think the fact that people know there's going to be a stock split, and that tells you a lot about what the company thinks. That tells you what's going to happen in the future. That tells you what happens, as far as investors getting in. Which actually that takes me to one other thing I want to talk about. I am so I don't know, annoyed now with everybody saying the same thing, right? We have Apple having a stock split. We see Microsoft, Amazon, everybody's doing a stock split, right? And the thing I keep hearing everybody saying is, well, I don't know why the stock's going up. It makes no sense to me. It's the same pizza pie. It's always the pizza pie analogy that everybody wants to use. I just cut the pie in more pieces. I still have the same amount of pizza. There's just more pieces. I don't understand this. Like, okay, I get it. On paper, in a textbook, you're right. There's no added value. There's nothing crazy that's going to happen. It's still the same pizza pie. But the thing that seems like everybody always seems to miss, the thing that nobody ever wants to talk about, and the reason why the stock prices tend to like this and tend to actually run is twofold. One, something else you've been hearing everybody say, it means management has high confidence in the company and what's going to happen moving forward. Yeah, obviously. Obviously that's the case. But the other thing that for some reason CNBC, Bloomberg, Yahoo, nobody seems to understand is that if I cut that same pizza pie in more pieces, yes, I have the same amount of pizza, right? I still have the same amount of pizza, just cut into more slices. But the thing they all seem to miss is that now more people can eat. So before, where if I cut that pizza into 4 slices, well, only 4 people can eat. If I cut that pizza into 16 slices, now 16 people can eat. And I think that's what everybody just seems to never want to talk about. If I have 16 people eating, that's 16 people that are happy. That's 16 people that have food in their belly. And that's what happens when the stock splits and it comes down to a price that more people can afford. If you look at the general population, a lot of people can't afford $1,000, $2,000, $3,000 stock, right? Or if they can, they don't want to buy just one share of something. They'd rather go buy Starbucks or Southwest, right? Because they can get multiple shares. Well, when you split these companies down to $100, $200, guess what? More people have an appetite for that, right? More people can limp into those positions. They can buy 3, 4, 5. Something that would have cost them 1,000 before for one share, now they can get 10 shares, and that is meaningful to them, and they're willing to do that. So I don't understand why it's so complicated for people. Yes, the pie has not changed. The pie is the same amount. But what has changed is you have more people to feed, which means more people will be happy. That happiness, I would correlate it to the stock price going up. All right? The more happy you are, the stock price goes up. I get pizza, you get shares. It's a win-win. And to me, it seems pretty straightforward. And that is why I have been accumulating even after they announced the stock split, because I do think this is very bullish. This confirms everything we've been talking about. All right, Nick, get to the point. Get to the numbers. I want to know what your numbers are. I got it, guys. Let's take a look at this now. So here we can see my spreadsheet where I track everything as far as Tesla delivery numbers by quarter. Keep in mind, these breakups between S, X, Y, and 3, at this point, they're very hard to keep track of. What really matters is the total by Gigafactory. So for let's just get to the bottom line. Bottom line, I think we're going to do 316,000 vehicles, just shy of 317,000 vehicles. So let me explain this. So the way I foresee this, I think we're going to have a big jump in S and X, a decent jump, right? So this is about 17,000 I have here. This is up from, call it 12,000. So that's a decent amount jump for those vehicles, which are very high margin. However, when it comes to the count or volume of vehicles, it's very negligible compared to 3 and Y. Now, when we look at 3 and Y, for Q1, I see us going to 62,000 and 60,000 for Model Y and 3 respectively out of the Fremont factory. I think Fremont factory, it may even be more than this. I think Fremont factory has kind of hit another gear. I think they're actually rolling pretty well. We've seen them cranking out vehicles left and right, and I think Fremont is kind of become the forgotten factory, right? We've got all this amazing performance out of Shanghai. Then we have the new foreign kid, Berlin, that's very interesting. And then, of course, we've got the American hero in Austin, right? The all-American factory. And then you have Fremont, which kind of, the redheaded stepchild that, is just hanging out there in California. And I think people are forgetting about it, and I think they're underestimating what it can do. So I'm projecting 139,000 vehicles out of Fremont. This includes S and X. I think this will be a record quarter for Fremont. So look out for that. I think that's going to be potentially a conservative number. I hope I'm right. Now down here, Shanghai, everybody's kind of freaking out because there's this lockdown that seems like it's going to be prolonged even until tomorrow. Now, I don't think this is actually going to have an effect for Q1, mainly because at this point, by the time they actually shut down, I think it was March 28th was the official shutdown date for the factory. That meant that there's, 3 days roughly left in the quarter. Look, even if they made 2,000 vehicles in that time frame, that'd be 6,000 vehicles, like 2,000 a day or something of that nature. I mean, maybe they're making more. I don't know. But the point is, I don't think the vehicles that they would make on those days would be the ones that they would actually be selling like the very next day, right? Tesla's fast, and they're quick, and they're efficient, but I don't think they're that fast. So I think, if anything, that would just have an effect for Q2. And I think Q2, we're going to see that kind of disappear because Shanghai will be back up. Shanghai will be running. Shanghai will be still ramping up. Berlin will be on. Berlin will be ramping up. Hopefully, Austin's ramping up. So I think we're not even going to see the effect of any of this. So I think, honestly, this is all noise and something to ignore, other than the fact that, just keep an eye on, make sure that this lockdown doesn't keep getting extended, right? We need to see this lockdown come to an end. That's the only thing I would caveat. But so with that said, I see essentially the same amount that we saw last quarter, 177,251 vehicles out of Giga Shanghai. And then, hey, this is fun, Berlin. I think we'll see 700 deliveries out of Berlin. We know there's 30 deliveries guaranteed, but we've seen deliveries happening in a few different countries across Europe. The most recent one I heard was, I think, in Milan. So I mean, at 700, this is, I'm just pulling a number out of thin air, right? But the way I see it, if they're doing 1,000 vehicles a week, they had 2 weeks. They probably had some already produced ahead of time. So 700, it's just my number. Maybe it's 500, maybe it's 100, who knows? But this is what I'm throwing out there. Again, either way, I don't think this really moves the needle. So Austin, I know some people are counting Austin or some people are counting Austin, I guess, for the production, perhaps. Look, I just care more so about deliveries. Production is great and all, but as far as what leads into my Q1 earnings breakdown, I need delivery numbers, so that's what I'm doing here. So everything of mine is from a delivery lens. But with that said, I don't think we're going to see any deliveries from Austin. I think they intentionally are staggering it. I know, so I'm conflicted actually. Look, this is how you know this stream of consciousness, because this is just raw. Here's the truth. When I was filling this out, trying to think this through, my biggest reason for almost adding vehicles into Austin was because Elon and Zach said that they would be delivering Model Ys with 4680 batteries by the end of Q1. And man, I really think that Elon wanted to do that, and I almost feel like that maybe he did do it. I'm gonna be wrong about this, but with Berlin opening, I think that they decided to stagger off Austin just for a depreciating factor as far as how it affects the quarterly earnings. I don't know if I'm right about any of that, but yeah, this was a very big struggle of mine, because Elon did specifically say that. He gave a specific timeline, and it wasn't like it was, a very far out timeline. He said by the end of the quarter, which would have meant, March timeframe. And we've been seeing a lot of vehicles come out of Giga Austin. So I don't know. Maybe I'm wrong about here, but even if I'm wrong, I mean, I don't think they did many. So with that said, and giving you a little run through of what was going on in my head, we can aggregate all of this, and it comes out to just shy of 317,000 vehicles, which again would be a record. Now, consensus is sitting there at 309,000 vehicles, and consensus has come down dramatically. Actually started going up, and then it came down. But I think a lot of it coming down was because of the Shanghai lockdown. Now, the one way Shanghai lockdown could impact the Shanghai number would be if they couldn't get vehicles out. So think about this. Forget about making vehicles, forget about production, forget about any of that. But what if they had parking lots full of vehicles, but because of the lockdown, they couldn't get vehicles out? That's the only thing. However, thinking this through, Elon, Tesla, they're very good at troubleshooting. They're very good at thinking, 10 steps ahead. We've known that there's a potential lockdown coming for a little bit now. I think they would have been pretty proactive about getting those vehicles out as fast as possible, or at least getting them out of Shanghai, staging them somewhere else so that then they could deliver them for the quarter. So we'll find out. I mean, I think Saturday, Sunday, maybe Monday. Monday would be pretty late. But Saturday, Sunday, we should get the numbers. And whenever we get the numbers, I'll try to make a video sooner than later about it. And hopefully it'll be a quick video. But so those are my numbers. And hopefully you didn't get too upset or triggered about my April Fool's joke. It's just joking around, guys. It's just once a year we get to do this, so why not have a little bit of fun? But all right, let me know down below what your numbers are. I want to know what your numbers are. Let me know what your predictions are, and then we'll see who gets the closest. And hopefully I'm wrong and it's 320. That would be beautiful. All right, we're gonna leave it there. Do me a favor, hit the like button, hit the subscribe button, ring that bell. I love you all. See you soon. Peace.